Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, today in the second weekly research and video we will take a look at the Australian dollar again, mostly because in the last week markets were really silent, so nothing really interesting is going on here. Yesterday we have talked on the New Zealand dollar because the situation there was needed to be updated because we haven't taken a look at it for the half of the year already. On the Australian dollar, it's just shows most bright setup right now, and it shows clear targets that could be traded and could be useful in the coming week. So that's why I think that we could update our view on Australian dollar. Also guys, among other major currencies, it's interesting situation on the Canadian dollar, so I think that it could wait a bit more to be updated. So maybe on the next week, right on the New Year's session, we will take a look at the Canadian dollar. We'll see. So it will depend on what we will get on the coming week, because those of you who have followed our weekly researches, you probably should remember that last our speak on the Canadian dollar has been done before the APEC meeting, where they should come to agreement on the contraction, the freezing of the extraction. And initially, the overall background and the technical picture shows that they probably will not come to agreement. So it was really great chances that the Canadian dollar will break the resistance and continue move up. I mean chart of the Canadian dollar to United States dollar. So, but suddenly and unexpectedly, they still have found some consensus. I mean, the APEC countries and non-APEC countries, and Iran, Russia. So, and they have frozen the extraction. As a result, crude oil has skyrocketed above the 50 barrels, the $50 per barrel. So, and the Canadian dollar has dropped. But this reaction was really short term, and currently it seems that we were not as wrong as it was seemed previously. So our suggestion mostly was correct. And right now, if you will take a look at the Canadian dollar, last week this was a really tremendous rally back to the major resistance. This rally stands not quite in a row with the normal behavior of the bearish market, or a market that just finalized the retracement and is ready for a further drop. And that's why it seems that maybe, in fact, as at final we will be right in our suggestion that this upside reaction on the crude oil price is also the short term, and Canadian dollar indeed could show the upward rally continuation. But not all conditions are ready right now for discussion. So probably we'll need to see a week more to understand what's really going on there. That's why today we have chosen the Australian dollar, not the Canadian dollar. So on the Australian dollar, if you remember last week, we mostly was expecting the double repo buy pattern on the intraday charts, because we thought that maybe some profit taking, some closing of the shorts will happen, and it could show some minor bounce, tactical stuff, because we didn't want to make any long-term trades. We would like to finish it before the Christmas holidays. But Australian dollar seemed to be so weak that it wasn't even able to show minor bounce, because no, in fact, closing of the shorts has happened, and the Committee of Traders report even shows that the closing of the longs have happened. So that's why, as you can see, last week we not only haven't got the double repo pattern on the intraday charts, but also Australian dollar has dropped even further. And right now it stands slightly below the monthly pivot support one and major 72.12 support area. So in fact, market stands in the free space, because between these lows and our next target, we have no real supports, except maybe these lows, but that mostly not quite the support. I said it's probably some kind of the advantage of the existence of lows here, because if you remember our recent discussion, Here we have two targets that stands at this 70.50-71 area. First target is a major ABC top pattern. It's 100% extension. And that target stands from this minor ABC top. Overall action looks very bearish, so because market is considered very fast plunge here. Retesting of the monthly pivot point, failure to pass through it and dropped further. Here market has reached 618 target of this ABCD pattern, shows minor retracement and now is dropping further. So definitely this some kind of the thrust we see. It's really acceleration here. And actually market has no choice but just to complete the target because it already stands between them. As it hasn't happened any reversal to the upside here at mining target and it's dropped further. And it already stands below the major supports. So actually it's really no more choices than just to drop further and complete the target. That's what we will be expect on the coming week. Also take a look at market right now is not at reversal. So actually nothing prevents, it has no barriers, nothing prevents further downward action. So that being said, on the daily chart, our next destination point 70.50-71 area. Probably they will be hit at once. It's at the same time just because both targets stands below these lows. And as stops have been triggered here, this market could accelerate further and probably both targets will be reached on the next week simultaneously. On the intraday charts, guys, on the 4-hour time frame chart, you could see just how market is really weak. So here we expected to get double repo pattern, but we haven't got it. Also take a look that market has dropped on Friday even below the 1618 target of this butterfly. So it means that butterfly has failed. Traders usually tell that butterfly, if it fails miserably. What does it mean? Because butterfly, it's such kind of pattern that usually it triggers at least minor retracement. So usually market always reacts on the butterfly. But if you do not see any reaction, it means that market is really weak and downward continuation could be even with the acceleration. That's why traders usually tell that butterfly fails miserably. So here you can see that market has dropped below 1618 extension target and no reaction on the butterfly completion was. Since trend is bearish on the daily chart, market is not at support, it's not at oversold. That's why hardly any significant retracement will happen. Probably we should watch for bounce to the 72 area, maybe 72.15, right to this level. Market could retest, just test the weekly pivot point, retest broken monthly pivot support one, show minor retracement here at the beginning of the week, but currently we can't count on some greater because no reason just for that. No reversal patterns have been formed, no supports, major level already has been passed, so nothing. That's why, guys, our trading plan in Australian dollar is to wait maybe for minor retracement just to testing of the weekly pivot point. And after that, the next week, downward action probably should be continued because traders will start to return back on the markets after the holidays. So maybe it will not be as active as it could be the week between the Christmas and the New Year's Day, but some activity probably will appear. And finally, on the next week, we expect that market probably could reach the next destination point. It's 100 pips lower. It's major destination on the daily chart. That's the trading plan for the coming week.